Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial. Please make sure you're aware of all your risk prior to placing any trades. Also note, in this presentation we're covering hypothetical computer simulated trades and or results. They're believed to be as accurately represented as possible. Keep in mind live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke from Locke in Your Success LLC, and myself and my team of mentors are here to help you win in the markets and in life as well. And today, I'm here to take you into the realm of something called high probability options trading. High probability options trading is where we utilize option strategies to make money from the passage of time rather than depending solely on price movement in order to make money. Now, this means that we can often make money whether the market goes up, down, or sideways. It doesn't mean we're going to win all the time, but our probabilities of winning are much higher than they would be had I only decided to do a directional trade. And the option strategy that I would love to share with you today is called the Bearish Butterfly. The Bearish Butterfly is a trading strategy that we do on the Russell 2000, and it takes advantage of a variety of market conditions, such as overextended uptrending markets, volatile and very volatile downtrending and sideways markets, and very smooth downtrending markets. As you can see, the strategy does perform well in a very large variety of market conditions. This strategy requires a minimum of $5,000 per trade. The example size we're going to show you today is a $50,000 planned capital example, and it has a profit target of 30% of planned capital, or in this case $15,000. It has a reduced profit target if we get 21 days to expiration of 10%, which in this case would be $5,000, and we have an exit loss trigger of 30%. This is a fantastic strategy. It's a strategy that we've been doing since 2006, and it's performed extremely well for us in the last, it's going to be 16 years. So this is a time-tested and proven strategy, which is why I love sharing this with you today. But before we get going here, I'd just like to ask for your support and ask you to subscribe and make sure you like our videos. It allows us to bring this type of quality content to you in the future. All right, so this analytical software that we're showing you here right now is something called Options Net Explorer. This software gives us a risk profile graph, and here we have our asset price along the bottom. We have our profit and loss up and down the side, so a little bit different than a price chart. We have our sharp-edged blue line here. It looks like a triangle. That's our expiration line, and what this line is referring to is the value of the position that we're trading at settlement at any given price point of the Russell 2000. And then we have our curve line, which is giving us the projected value of the position with any type of movement of the Russell as of today. So lots of good information here, and this is a very useful software. Now, this is a back testing software as well, so we can come in here and we can go to a past date. So right now we're Friday, November 25th of 2002 at 12:30 Eastern Time. Now, one of the things that we do with our strategies is we do not want these to be time intensive. In other words, we want to be able to manage them with a minimal amount of time. So we have a checkpoint time. And we don't really care what happens during the day. We come in at our checkpoint time. We observe what's going on, decide if we need to do anything. If we need to do nothing, we just move on. If we need to do something, we do it. And then we get it done. And it only takes a very short amount of time. This allows us to trade these part-time. It allows us to trade these with, if you have a job. It allows you to trade if you're in retirement and you want to go on trips or whatever. So long as you have internet service, you can trade, and it's not all that demanding on you. So we really, really love this type of trading for that reason. Now, getting back to our analytical software, that's the date. The asset we're trading is the Russell 2000. The last asset price as of this time was $1,872. We have our call options across the top. We have our put options across the bottom. Our expiration cycle is going to be January 20th, 2023. We are going to be 56 days to expiration. That is when this trade is entered. We're entering this as a standard iron butterfly. So we're coming in at in this case, 20 points, approximately 20 points under the money. That's going to give us 1850 for short strikes. We use 50-point wings. That's going to give us 1900 and 1800 for long strikes. And this is something referred to as an iron butterfly. We would enter it as a single spread order. And that's going to give us a position that looks like this over here. And from here, if the market goes down, we're going to roll this position back. If the market goes up, we have what we call a reference point. Our reference point, in this case, being our short strikes, making our reference point 1850. We have an add point at 1890. So if at our checkpoint time, the asset price is over 1890, we're going to add in butterflies. And we're going to do that at the 1860 level. And then if we make it to 1910, we're going to add in butterflies at the 1880 level. And then from there, every 10 points, we have this roll sequence that we start. And then again, to the downside, we're going to scale out first and then roll back. So let's go ahead and we'll move on this trade. One of the things you might notice is we're entering this trade at 12:30. That's because this day is the Friday after Thanksgiving. It is a half day in the marketplace, so we are going to enter it a half an hour before close. Subsequent adjustments are going to be made at 15:30, which is a half an hour before our normal close. So let me just go to first adjustment here. And notice too, by the way, the margin in this trade, or the capital. So this is a $50,000 planned capital position. It starts out with only $5,690. So let's move on here and go to our first adjustment. And that is going to be on December 2nd. So we've been in this trade for a little bit. We have an asset price at our checkpoint time of 1894. We have an add point at 1890, so we're going to go in and we're going to add a iron butterfly at 1870 with the 50-point wings. So this is what our position looks like now. As the position gets scaled into, we end up getting more and more benefit if the market pulls back, which makes the strategy excellent for our more choppy mean reversion type markets, because we can get our up move, we can get scaled in, then we get pulled back into the center, and we can end up making a lot of money very quickly. And that's one of the reasons for such a high profit target on a position like this. Unfortunately, that doesn't happen in this particular trade. So let's move to next adjustment here. We make it to the 15th, and we end up having a very substantial down move here. So if you were to look at the price chart, we had this up move that kicked us into our, I believe it was this one here, this up move that kicked us into 2/3 of our position, and then markets just kind of fell apart after that, and we're all the way down to 1780 here. Nasty, nasty whipsaw. So what's going on here? We get pushed back outside the back of our tent here. And that being the case, what we would normally do is we would normally exit this upper butterfly and then check our delta. If we exited the upper butterfly and checked our delta and we were, say, under 10 positive delta, we just leave the darn thing alone and continue trading with 1/3 of a position. If we're more than that, which we are in this particular case, what we're going to do is going to remove this whole position. We're just going to close it, and we're going to reposition in the market where we can enter the market with a single butterfly with a neutral delta. We're going to reset our control point down to 1820, and this is going to be our new position. Notice we had a nasty whipsaw. We're up $4,050. Not bad. So this is where we stand here. So from here, we reset our control point. Our new scale-in point is going to be 1860, 1880, and then we have roll points at 1890 and so forth. So from here, let's see what happens. Well, the market continued down. So since we continue down, what we're going to do here is we're going to, and we're positive delta again, more than 10. We're going to close this position out, very simple order, and we're going to reposition to where we are relatively neutral delta. So we're going to come here, and we were in, I think, the 1810s. We're going to go into the 1800s, and this is our new position here. We're going to reset our control point to 1800, and our roll points and our subsequent add points and roll points. From here, if we move to our next adjustment, that happens on the 28th. If I ignore here, you can see what happened is the market's continuing to go down. We're still up about $4,000, so everything's going quite fine. We are slightly outside the tent. We are at 13.82 positive delta. That's more than 10, so we're going to do the same thing. We're going to take these 1770s off here, and we're going to move these back to 1750. And this is our new position. If we move forward here, go to next adjustment. It looks like we probably closed the trade. So let me ignore today's trades. Let me look at what's going on here. We're going to open up our trade here. So what happened here is the market ended up kind of fluctuating a little bit, spent a few days in this area. Here at our checkpoint time on the 5th of January, what's happening is the asset is, the profit and loss on the trade is $5,060 approximately. This being the case, we're going to exit. And you might say, well, wait a minute, you said the profit target was 15,000. I did, but I also said we had a reduced profit target of $5,000 if we were under 21 days to expiration. And as you can see here, we are now currently 15 days to expiration, and we hit our reduced profit target number. That being the case, we exit the trade and we close this at a profit of approximately $5,000, and that's 10% of our $50,000 planned capital. But one of the wonderful things about the bearish butterfly is very often we don't get anywhere near $50,000 planned capital in this trade. As a matter of fact, in this trade specifically, we got the maximum amount of money we had in this trade was only about a little over $11,000 in capital. So that means that we made $5,000 on like $11,000 capital. The actual return on actual capital risked in the trade was over 42%. A fantastic, fantastic return for this episode's winning trade, the bearish butterfly. If you liked what you saw, please subscribe. Subscribing allows us to continue to bring you this wonderful content. Also, if you'd like to find out more about us, come on over to lockeinyoursuccess.com. That's L-O-C-K-E in your success.com, where you can discover how you too can follow along with this and many other great strategies in our options trading for income webinars that we have every Monday morning, where we cover 12 powerful non-subjective trading strategies for you to learn and understand how to make money and profit in this type of trading. Also, come on over to thewinningtrade.com. That's thewinningtrade.com. And there you can learn about upcoming winning trades and explore past winning trades and find access to free bonus material. Also, while you're there, be sure to check out our free trading performance podcast, where you can learn to skyrocket your trading regardless of the type of trading you do. If you have any questions, comments, or anything else you'd like to see on this webinar, please feel free to post those into the comments. We love to hear from you, and I love to interact with all the wonderful traders out there. So have a great week, everybody, and I'll see you on the next winning trade.